All right, welcome to YWR. We have a special guest today, David Quinn. Now, I always say that we come to YWR to think differently, try to be contrarian, have a different perspective on things. And strangely, these days, the contrarian perspective, I think, is to be positive. And so I thought it'd be great to have David Quinn from Targeted Equity Consulting on the show today. And we're going to talk about the US, the economy, the AI cycle, NASDAQ, and why US equities and maybe equities in general are going much higher, because I think this is the contrarian view. David and I have known each other for over 10 years, and David's a great thinker and not afraid to tell you what he thinks and to be differentiated. And so he's such an independent thinker, and he's very, he shares his views very well, and writes them up well too for his research clients. David, good to see you.
Great to see you. Thanks for having me.
Yes, you, I think you're in Boston, right, Dave?
Correct, just outside of Boston.
Excellent. David, we kind of, I think we started engaging and we kind of agreed on a point just right off the bat that was, since the May sell-off, I think there was a lot of bullishness at the beginning of the year around the administration and the market and the dollar. And then there was a sell-off into April and the VIX went to 40, and the market has just snapped back up to the highs, making new highs. You have Microsoft, a lot of stocks up, kind of making new highs now, but I feel like people's sentiment has been left behind. And when you talk to people, there's just a lot of bearishness out there. And you were reflecting that back to me about just that all that you've heard all these concerns. And I think your view is that a lot of these things don't matter. And so maybe I've written about my view on these things, but maybe you tell me the kind of things you're hearing, what your clients are saying to you, and maybe your just general outlook on the era that we're in. And as you say.
Yeah, it's a broad topic. I would say very simply put, when you look at all the metrics out there, positioning, sentiment, I mean, when we were in April and the VIX was at 40, we were getting some of the worst sentiment readings in 3 decades. Okay. We're doing that during a period where you have relatively peacetime. We don't have a world war going on. We don't have anything of that nature in front of us. So here we are months later, back at all-time highs. And one thing a term I use all the time when somebody comes up with a data point that is driven more by emotion than by fact is it just doesn't matter.
Yeah.
It's not relevant. And I came to the conclusion a while ago that the only thing that really matters is liquidity. We are a society of poor demographics, high debt, but we have this incredible thing called technology that is driving the bus. So when you have a liquidity cycle such as we're having, where global liquidity is rising, and you have a technology cycle like we've never seen before, why are we bearish?
Yeah.
I've covered Europe for a long time. As you know, we've known each other for over a decade. I started covering Europe in 1995, I believe, 1996. I've been hearing the death of the US consumer for that many years.
Yes.
And, it's not the same as it was. Things always evolve. It changes. It's, whatever you want to call it. But at the end of the day, the amount of cash on the sidelines, whether it be, and this is not my data, this is the Federal Reserve's data. If you look at checking account deposits or money market funds, I mean, the amount of money in cash, the chart looks like NVIDIA's stock. I mean, it's gone straight up for 10 years.
Yes, and it's amazing. Money market funds, I was amazed that just even in the last 18 months, how they've been going vertical. I mean, it's nonstop. I thought they would have, in some of the past cycles when the market's doing well, they'll pause or go down a little bit because like people are putting money in the market, I assume. I mean, but no, they've just, you're right. It keeps, every month keeps making new highs.
So if the U.S. consumer has money in the bank, it's earning more interest today than it's earned in the last decade, the ZERP time. Unemployment's really low, and wages are going up, and liquidity is going up. Why is everybody so bearish?
Yes, and I'm David, I'm in Europe, right? So I think sometimes international investors don't realize maybe how well actually a lot of American households are doing. I mean, your house prices are, you can't sell the house because because of the mortgage rates, but people's house prices are worth a lot. People have a lot of home equity. Their stock market accounts are through the roof. Americans have really benefited from this boom. They've got 401ks, they've got equity accounts. Their house is worth a lot. They're getting unemployment's low. Wage growth is above the inflation rate, as you pointed out. It's a pretty, there's always difficult parts of the economy and sectors that aren't doing well, but on general, Americans are doing pretty well and they're living pretty large. You compare.
I agree, and I'm fortunate to live in an area in and around Boston that is doing well. But when you go out at night, it's anecdotal, but restaurants are not empty.
Yeah.
Even though we've had this inflation spike over the last couple of years where, the cost of your dinner is probably up 40% than it was 2 years ago. There's no empty seats.
Yeah.
So that's the part that always surprises me. And I have some kids in college, so I get to travel around the country to go see them because they're in different part of the country. And things are doing pretty well there too. Again, we've gone from this, I think everybody wants to be bearish. I think the geopolitical situation is making people bearish. But they're still these bearish people are still going on vacations. They're still, you know what I mean? So it's, I don't see anybody tightening their belt.
And David, two things. I will say it because we talked about it offline. I think there's two things that are kind of making it difficult for portfolio managers to kind of call this correctly or what's tripping them up. One thing is I think a lot of them are not big fans of Donald Trump, right? And so I think there is a mental filter that if you really don't like Donald Trump and you dislike everything he is doing, it's hard to then imagine that the market and the economy are going to go to all-time highs. I think that just those things are hard to hold in your brain at the same time. And I think it's tripping. I think that's one thing tripping people up. But then the second thing you said was when we were speaking earlier was, sorry, that you really got to be selective about what you read and the types of information, because a lot of it is just inflammatory and noise and meant to trigger you and will actually throw you off making money in the market, right?
Correct. And the most recent episode of that, I would say, was when you had the unveiling of DeepSeek from China. My inbox went crazy with the AI cycle's over. And I'm like, guys, no, wait a minute. It's the polar opposite of that. I said, spending is going to go up, not down, because it's going to go beyond, Amazon, Microsoft, Google, Tesla, spending money on AI. Every country's now going to have their own sovereign AI. So
that's what you took away from DeepSeek?
Yes.
Oh.
Yes. Because like I said, we said offline, there's a quote a couple of years ago that, you had Eric Schmidt of Google say we're going to a bipolar world. Okay. And, when you look at, the way the world's kind of shaken out, you do have two different technology platforms, an East and a West. Okay. And just like we didn't want to lose the internet or mobile revolution here in the United States, every CEO of these large companies are saying it's an existential risk to their business if they lose it.
Yes.
Imagine being in a government. So now you're seeing recently, one of the Mag 7s announced a massive investment in Europe for AI.
Mm-hmm.
You see the numbers coming out of the UAE
Yes.
on AI, in the Middle East. You see the numbers coming out of China on AI. Okay. So numbers are going up, they're not going down. It's broadening out.
Yes. Two things. One, you were talking about the bipolar, the West AI versus the East, and just from an investment side, that's actually a big regulatory barrier, right? If it's kind of positive, if you're Google or Nvidia, you don't have to worry about competition from Chinese chips because they're not. I mean, there's a kind of a thing in economics that regulations are almost like this hidden good for a lot of companies, right? Because you don't want to, you say you don't want to be regulated, but wink, wink, you actually don't mind it because the more regulation there is, it raises the barrier to, and it makes it more difficult for new people, for competition. So this, you're going to have a protected market for a large part of the West. So good for the investment cycle of these companies. They're not going to, fine, they're going to competing with a Chinese chip at 10 cents less because that chip will not be permitted to be in the ecosystem. The second thing is what you're saying is this is the sovereign aspect to this. And you were also saying these numbers are so big. And I have to say, you were throwing some numbers around, but one number I came across that was just like, actually, this is insane. That Stargate AI center in where is it? Abilene, Texas, or something like that. It's like it's a $50 billion building.
Correct.
I'm like 50. I mean, I don't know, what does a shopping center cost if you like, I don't know, 500 or 600. I don't know, big shop. I don't know what it is. 100 million something. This is a $50 billion building. And I think NVIDIA said 40 billion of it is the electronics or something. But these are, you were also talking, these are very, very big numbers. And I think this gets to what you were saying about this cycle is probably going to be a lot bigger than anything that's preceded it. And we're kind of missing the magnitude of it, aren't we?
So you're 100% right when you say regulations increase the moat of the incumbents.
Right.
100%. I mean, look at all the regulation that's been thrown at Meta, Google, Apple, Microsoft. And in the end, all it has done is make them bigger. Now you go to all of the banking regulations that were put in post 2008.
I always thought that with JP Morgan that they would loved all of this. It made it impossible to be a bank other than them. Who else could afford to do all this?
Not only afford, when you look at the US since 2008, since these regulations were announced, I think the regional bank count went from 8,000 to 4,000.
Yeah. Oh, wow.
We lost 4,000 banks in the United States.
Yes.
In the next 10 years, we're going to lose another half again. So that's going to go down to 2,000. So if you remember the quote back then, it was too big to fail.
Yes.
We'll never let that happen again.
Yes.
Every one of these institutions are materially bigger.
Right.
So you're right about the moat. I agree 100%. And the numbers are just staggering. I mean, if you look at the difference, I'll put it in two perspectives. And we were talking about this offline. Go back to 2022, 23, and look at NVIDIA's numbers towards the end of the decade. They've gone up 125%, those estimates, since that time frame. We are talking about, let's say, 100 billion to 250 billion, 150 billion increase in estimates. I mean, that is unheard of. We've not seen anything on that scale. Then you go to what we're talking about on the power needs for this. Like, the utility industry just became a growth industry for the first time in my lifetime.
Yes, I think that one is a slow or like a kind of one of those ones that will happen. And I think we're probably underestimating it or it's hard to imagine because it hasn't been a growth industry.
Well, I'll just put it this way. Like you have an industry that grows at 1-2% a year, and then all of a sudden it's growing at 15. That's a huge difference.
Yes, yes.
And then, when I was in my former job, we used to cover a lot of the E&C companies. Name one energy power plant that was built on time, on budget.
Right.
So whatever the numbers are, they're going to be higher than what we're estimating. So, when I look at all of this, and then I look at the regulations and I look at the infrastructure that needs to be put in place, the productivity of AI, and Salesforce just came on. Mark Benioff just stated something like 30% of his business is now run by AI.
Oh, wow.
So, I'm looking at these numbers saying, okay, we're going to have an infrastructure build out. We're going to have a technology boom and productivity boom of AI. It's going to be more regulated, so the incumbents are going to be even better off. And then you mentioned the chips between, us not allow China to use our chips and China not allow us to use theirs. Has anybody ever gone through the presentation of NVIDIA and seen the product launch, the map that they put out? It's staggering.
Which one are I'm
So if you
looking
look at NVIDIA and you look at their cadence of new chip launches,
Yes.
there's two things that stood out to me. Number one, it used to be every 2 to 3 years you'd get a new chip. They're launching one every 12 months.
Hmm.
Not only launching them every 12 months, these chips are exponentially better. So this was the world against NVIDIA. Is ASICs going to eat their lunch? Are people going to go to more specialized chips? And I'm sitting here saying the ASICs market can't keep up with their product launch.
Yeah.
It's not possible. So all of these things in place, I mean, yeah, I think we're, in terms of an economy, I don't think we're in a bad spot. I think the growth numbers are probably going to over deliver because nobody believes them. That's why everybody's bearish.
Yeah. And I think with these types of growth investments also, and I look back to my own experience with like social media and Mag 7, I think it's easy to think it's priced in, right? And you go, oh yeah, I get the story, but that 25 or 30 multiple is that you're paying for that story. But then as you grind along, the growth just keeps getting, I mean, I just find that these stories compound, and whatever PE Google was on when it IPO'd and you thought it was expensive, it didn't matter. I mean, right? I mean, I just think that whatever you were thinking that the Google IPO was expensive, and I think it's one of those.
So
and we're not talking about huge numbers either.
I agree with you 100%. It's human nature to focus on the one that doesn't work. We don't focus on the 10 that do.
Right.
So to give you an example, go back to, Intel. Everybody say, hey, look what happened to Intel. It got totally usurped by these other chip companies. Well, yes, but look at those other chip companies now, where they'll say Apple. My view is the way that people are looking at AI today is the same way they looked at Meta when it came public. Remember, it came public and had a disastrous debut.
Oh, yes. And how are they going to generate revenues?
Yes.
And oh my God, they spent 26 billion for WhatsApp. And what an idiot that Mark Zuckerberg is. And
yeah. And Google bought YouTube for a couple billion, and everybody like, why are they buying that platform? Or Microsoft bought LinkedIn. But my point is, like, at the end of the day, when you look at these businesses, nobody knew how Meta was going to monetize their business.
Yes.
Everybody said Amazon's a book company. Then they became a logistics company. Then they became a data company. Google, nobody had any idea who was going to win the search war or how they're going to monetize it. I mean, remember how search engines there were back when they first came out?
Yeah, and it didn't have it was they IPO before paid search was even invented. I mean, they did, or it was early or something.
So if you go back and look at the numbers at Google and the trajectory and the revenue growth and the profitability and the cash flows that they're able to generate through that growth, like, that is happening so much faster today. And that's the part that I think people are missing. I mean, you have these businesses that not only are growing at, obscene numbers, but they're generating a ton of cash. That did not happen in 2000.
Yes. And
So
if I get, go
I'm
on.
sorry, but I was just going to say, here we are today, and what are we doing? We're just doubting every quarter that NVIDIA puts up.
And I will go, and this is maybe more about like Amazon and Google and stuff. And I go, okay, think of the network effects. Think of already the network effects they have. Now, if you're a business and you're using Gemini, you're basically outsourcing the intelligence of your firm to Google or through Amazon Bedrock. They have their hooks. So you couldn't, I mean, they already have your data. They're already running your firm. Your entire firm is on the cloud. Now they basically have your brain. They are, you are almost going to have, this is an exaggeration, but it's almost like all these companies around in the world and doing all this commerce, but a lot of the value is being extracted through on the advertising, through Meta and Google, through the back office, the data, the AI, through Amazon, the Microsoft, the behind this, there's a business on the outside, but behind the sign in the building, these 7 companies are extracting tremendous amounts of value from from everything. And they're just going to get stronger with AI. I feel like it.
So I would argue that mobile did not increase productivity because, I look at what people use on their mobile devices now. I find 80% of it to be actually distracting, not productive.
Yes.
Okay. So, and now we want these dopamine hits of, we want this next thing on our feed, the next thing. And that's why TikTok's so great. I mean, it drives me nuts that my kids are on it and they get sucked into these, hits that they put on their feeds. But at the end of the day, these companies have so much data. And the difference is, I think AI can be used in a constructive way. And I'll put it this way. I know my strengths and weaknesses very well. I don't love writing. I love reading. I love understanding new businesses, but I hate writing reports. Now I just do all my research and I load it into my AI engine and it produces exactly what I want. And it does it over and over and over again. And I will say this, in the future, if your business is not using AI, it's going to be considered malpractice. And let's use the medical arena for one area. Like you get an X-ray or an MRI or some cell testing back. If you're not having an AI model which has the entire database of the world in there.
Yes. Why were you not using the AI specialist doctor to do the analysis?
Or at least check your work. Yes. Or at least come up with a different diagnosis potentially that they're missing.
Oh goodness, that's such a flipping it 180 degrees from I'm not sure if I should use AI to you're going to be liable if you don't.
Yes, I believe that.
Oh, I think you're totally right on that.
And I think it's going to be across all sectors. I mean, how do you go? What is it? The company in Sweden, is it Klarna?
There is one, but it's a credit company, right? Klarna is.
Yep. But they were able to take all their data, train it, and what they did is they saw their operating margins go up like 200 and something percent, and they're able to reduce their workforce by 50%. So now if you're in that arena with them competing against them, and you're not doing that, you're going to be out of business in 5 years. It's malpractice. You're going to lose your employees. You're going to lose your business because they are going to be much more profitable, much more efficient, and much more accurate.
Yeah.
So you can use it in the finance industry, the medical industry. If you're running a plant and you look at the things that a Palantir are doing for some of the commercial companies, like predictive maintenance, like truly predictive.
Right.
Like look at all the companies running to Palantir now. Like I remember reading research reports 3 years ago when it was 10 times earnings, and everybody said it was an overglorified government business.
Yes. It may not even had earnings back. I remember hearing that they didn't have earnings and that was the big concern. Everyone thought it was over. Yeah. Now
They
it's
had they definitely had earnings because there was like 10, 12 times but nobody understood where they were going.
yes.
Again, like nobody understood where Meta was going, or Amazon, or even Apple. And Apple was supposed to be the next BlackBerry or Motorola.
Can I say, and this goes back to something you said way earlier about choosing what content you focus on.
Yes.
I think these companies will often put out these investor days or these kind of developer days, and they'll be like 3 or 4 hours, but they'll go through all the products and talk about it. And it's really interesting. And I find I come away from them really understanding and appreciating what they're building and where they're going. But then I don't find that anyone else or very few people are, everyone's reading like the Wall Street Journal or something that was on Twitter. And I'm like, or they read something about Donald Trump said or something. I'm like, that stuff, it just doesn't have any perspective to it. I feel like I think you really should be spending more time on these developer days, IO day at Google, or just turn off Twitter or something else, or just the general news for a while, and focus on what companies are doing, especially these leading tech companies, because actually you'd be surprised how few people are actually focusing on this stuff. I think,
I think very few people take the time to actually look at the stuff you're talking
the
about.
source data, right? The actual, what's coming out of the company itself.
In the most recent note that I wrote, and I sent it to you, I put right in the note, I said, if you take nothing out of this note, zero,
Yes.
click on this link and listen to Jensen Huang's presentation, GTC March 2025. It's 2 hours. It'll be the best 2 hours you ever spent.
Was it the Taiwan one?
I'm not sure where it was hosted. But like, I mean, I'm watching this being like, okay, this guy's laying out exactly what's happening.
I know.
And then literally, 3 months later, you start to see the data come in, and all of a sudden, and he talks about the inferencing market versus the training market. And then all of a sudden you start to see
yes,
advanced micro devices number go up. I wrote a report last year on Micron, and I highlighted the demand for memory and how much it's going to grow relative to history. So we're not in the same memory market that we grew up in. It's not commoditized. And then I look at what what Micron just put out the other day. So my big thing is eliminate the noise, focus on the cycle, and don't get shaken out of your trades. And that could have happened very easily recently when the S&P, the NASDAQ got hammered, when the VIX went to 40 and we saw huge drawdowns. And people are like, what are you doing? And my answer was, I'm not doing anything. I'm doing nothing. Well, what do you mean you're not doing anything? Well, I know what I own. I know why I own it. And it's a 10-year cycle. We're 2 years in. I just remember in my old career on the sell side, I would read reports every year on, hey, sell Apple, sell Amazon. It got expensive.
right.
And how did that really work out? Even if you bought Amazon at the peak of 2000 and it went down 80%, where are you today?
Yeah.
It's just, so for me, it's not worth trading. It's not worth listening to the noise. I want to hear constructive bear cases. I don't want to hear, again, your government's doing this or so-and-so said that. That's not constructive. What is constructive is who's going to compete and unseat NVIDIA. Who is that person? That's what I want to find out. Because if they're not going to, NVIDIA is going a lot higher, a lot.
Yes.
And I personally believe that NVIDIA's moat is way beyond just the hardware. It's the software. It's the ecosystem. It's Apple all over again, basically.
I think it's the suppliers too. I got that from when he went to Taiwan. I was like, I think he's locked up a lot of the suppliers, the entire Taiwanese ecosystem. There's like a lot of mini NVIDIAs out there in Taiwan. And I was like, I think he's been building this for over a decade.
Yeah. So that's a great point, because go back and look at all the announcements from the Arizona plants, the Texas plants, to the New York plants. I think Micron announced like a 60, 70, $80 billion plant up in New York. Okay. If there is capacity, it is being eaten up by the winners because they already have the share, and their products are growing 30, 40, 50% a year. So if you're a company on the supply side, and a new company comes in and says, "Hey, we want to buy 1 million units," and NVIDIA says, "Well, I need 100 million units." Are you going to give that other company any room in your fab?
No,
No.
right? Yeah.
It's just that it's so, like, again, it's you can have a great product, but great products don't always win. Um, and I've seen this in telecom. You had the telecom mobile companies, and then I don't know if you remember the old company Nextel many years ago. They
Oh,
had
I
to push.
remember, but yeah, what was the walkie-talkie one?
Yep, and they're one of the first ones that could go international, and everybody said they're great. But what just happened? The big guys outspent them. They out manufactured them, and they
Right,
went away.
right.
So I kind of think that's a similar analogy today with these smaller companies. Yes, there will be one that breaks through and becomes a great company. Awesome, but they're probably not going to beat NVIDIA at training. It will
Right.
be inferencing or something else down the line. Like, they have won the training market. And why would you want to go and compete against NVIDIA in that market anyway?
Right.
So I think that's kind of where we're at. And look, I'm not saying the market can't go down. I'm
Yeah.
not saying we can't have a correction. I'm just saying things can get more expensive because they have before in history.
Yes.
Governments are not getting more responsible, they're getting less responsible. And back to our original point, when we started this conversation, I said it's all about liquidity.
Yes.
One of the things I wrote in my note was, Europe has finally started to outperform the United States. That's not because the European businesses got better overnight. It's because they stopped austerity. They
Yes.
announced they're going to spend an ungodly amount of money, and all of a sudden the indexes went up 30%.
Yes.
So, like, I don't know how much more proof you need that liquidity is the driver.
And David, you said an amazing point earlier that you're like, and this kind of goes back to these things when I go and I read in history about inflationary cycles. You're like, look, if you're anybody in this world, you gotta be in the market. You gotta be making 7, 8, 9% just to tread water, keep your head above where, the cost of going out or the cost of healthcare, the cost of college and tuition, like it's driving that dynamic could drive a lot of this money into the market. And it could be why we even get to see valuations go to levels that we don't think, that could surprise us again. And just you almost have to speculate. Not speculate isn't the word, but you almost have to be involved, or else you're kind of falling behind.
Yeah, I mean, people don't look at this enough, but the U.S. money supply is growing 7-8% a year.
Yeah.
I mean, what what returns 7-8% a year? Does cash? Do bonds? No.
Yeah. Yeah.
And then you throw in more and more taxes on everything because governments are getting more and more desperate because they've built up all this debt and they got to pay for it somehow. I mean, so we keep on reverting back to the same thing. Governments are not getting more responsible. They're continuing to print more money. They're continuing to make poor decisions. And let's even look more recently in the news, between tariffs and Doge and things like that. I mean, Doge saved $150 billion so far, technically. And some people say that's not even a real number. It is. Let's just assume it is. What percentage is 150 billion on 37 trillion?
Right.
So,
Is it 3% or something? Or
no, less.
okay.
But I mean, like, at the end of the day, it's like the budget they just put out, it increases the deficit. All the savings come at the end of the 10 years, which means it never comes because the new administration comes in.
My takeaway from Doge was I didn't even think it was 100 billion. I thought maybe I heard it was 50, and I'm like, look, the guy tries to cut $50 billion out of I thought that is the budget. What's the annual spend of the government? Is it 6
Something
trillion or something like
6
that?
trillion, something like
And
that.
I was like, 50 billion is nothing. And look at the outcry and the uproar. And you would think, I was like, wow, if trying to cut $50 billion causes that much, pushback, we're done. This
Yep.
is, so I kind of go to this, when people say, oh, I have my expression as bad as good. I'm like, yes, if you're worried about the debt, you're worried we won't pay it back, you know what? Get long risk assets, because that's this is going to, and there's not going to be a reckoning. Don't worry. We're not going to wake up one day and try and balance the budget. We're not going to ever pay this money back. It's just going to be in more debt, more inflation, more spending. And layered on top, you have actually in the US market an amazing growth cycle of technology, and the world leading the leaders in this entire trend are based in the US. So you have a pretty good setup, a pretty good thing to invest in as well. So
I think also that the politicians can't tell you the truth. Like maybe they want inflation above 2%, because maybe they need the nominal GDP growth to inflate our way out of this.
Right.
So, not maybe. I mean, I think that's a certainty, because how do you get austerity in the United States if we're fighting over cutting $50 billion in the budget? You can't get real austerity. The politicians do not have the backbone or the willpower to do so. So at the end of the day, the only way out is inflating your way out.
Yes.
To some regard. So we're kind of stuck in this position. Like I say, you got to play the hand you were given, not the one you wanted. And the hand we're giving says money supply is going to continue to grow. Liquidity is going to continue to grow. There is no answer to this debt problem, because, again, we don't have enough demographics to produce enough GDP to get us out of this.
Yeah.
So here we are with the, in a world that has struggling for GDP growth. I'm looking at some of these AI companies putting up 150% year-over-year growth.
Yes.
Like, where else are you going to get that?
And I know we should probably wrap up, but I know we're not supposed to give financial advice, but is it just like, hey, one thing to consider is, or in a world of very confusing investments and there's a risk to everything, but is it like, look, one strategy might be to just own the NASDAQ over the next 10 years, like own large cap. There's a pretty good case that large cap tech is going to monetize this AI cycle quite well, is in a very strong position with a lot of moats around it and a lot of things going its way. And generally, it might be surprising, but generally the institutional world is not on board with this. It is underweight, just as an extra kicker.
Yeah, I mean, look, I don't want to give advice, and that's not
okay. Yes, we don't give advice.
No, not what we want to do. But I mean, at the end of the day, I will just say this: every correlation that you and I grew up with in the industry is breaking one by one.
Oh,
every single one.
Which ones?
Well, you go back and you look at, can rates go up and can the market go up? Like, everybody got the recession risk wrong. Everybody got the recession risk wrong in 2023 because they said Jerome Powell was going to destroy the U.S. equity market. Meanwhile, it was one of the best years ever.
Yeah. Yes.
Okay, so that's one. The 60-40 portfolio, completely blown up. Okay.
Goodness.
So you go to that one. You go to, there's a whole, I had them all written down. There's like 10 like legacy ones. That when you look at like one by one, so the dollar was very strong and oil was strong. You know what I mean?
Right. Yes.
So you have all of these correlations that we always look at. I read these papers and they come out, they say, oh, you can't own this because of this. I'm like, so what happens if AI does well and the NASDAQ does well and utilities do well? That's not normal.
Right. Utilities would be defensive, but actually they're all related. Yes.
What happens if consumer staples are no longer defensive because private label is better than their label and it's 30% cheaper?
Right.
It's the reason why I've always liked Costco and BJ's.
Yes.
because, I don't think the quote unquote companies that had pricing power, like, oh, you go on the breakfast aisle, you're going to buy Kellogg's. Not anymore. So like these things that we grew up with and kind of the go-to investments for certain parts of the cycle are probably not going to be the same, is the way I would phrase it.
Is the private label thing that the private labels have gotten better than in the past? Like that offering is better than it used to be? Like that?
Yeah, if you go into, well, it's a function of two things. It's a function of grocery stores trying to claw back some margin
Yes.
from the retailers, because before, again, if you were if you go in the cleaning aisle, it was Clorox, right?
Right.
But now you have all these private labels. And I think the company that really kicked it off that, and I'll go back, 10 years, Costco's came out with a Kirkland brand,
Yes.
and their products are phenomenal.
Yes.
And then I started doing work on BJ's because they went private equity owned, they put a new management team, and their private label portfolio went from basically non-existent to 25% of their business. And, that's their Wellesley brand and their Berkeley Jensen brand.
Yeah.
And I'm sitting there like, why do I care if the paper towels are Bounty or Berkeley Jensen?
Yes.
Or the plastic spoons or the Solo cups or like, so I think consumers have just gotten smarter, and retailers have done a much better job of putting out really good products that are
Yes.
private label.
Yes.
So again, when things get a little bit difficult, people usually would run to staples. And I'm saying they have no pricing power, they have no more volume. Why would I do that?
This is not the safe sector that you think it is.
Yes. And again, it's taking the world that we once knew and just turning it upside down. That's
Right.
what I feel like we're living in that type of environment. So I just think you have to think very carefully about, hey, this is happening. I need to do this because it worked in the past.
Yeah.
I'm not sure that's the way to think about
Rules
things.
of thumb from the stock market of the,
Yep.
just be careful with those, because the whole ground is changing under our feet.
Yeah, I mean, we just had the biggest decline in the dollar in how many years?
Yeah.
Oil's gone up a little bit, but not much.
Yeah.
Normally it
Yeah.
should be, dramatically higher.
Yes.
So like there's just a lot of things out there that are, I just would say, be careful, do your homework, think about it. If it's truly a good investment, you don't have to rush in.
Yeah.
If you get the cycle right, just get in there, stay there, and leave it alone.
And you'd say also focus more on like actual source data, what are actual companies saying, and listen to their presentations and just spend more time on that. Even though I know the other stuff is so addictive, but the actual company presentations are much more profitable.
It's really boring to read an annual report.
Yeah.
It's not so boring to listen to a 30-second snippet on Twitter that gives you like this powerful story that lacks many facts.
Yeah.
It's a story. It's not factual. So, I would say listen to what they're saying, and then are they delivering? Like my biggest mistakes in my career were believing a story and getting sucked into a story, and then making excuses for a company quarter after quarter after quarter why they're not delivering.
Yes.
So now I just say, okay, great story, deliver. If you deliver once and have to pay up 20% for the stock, I don't care. I mean, my best investments were buying companies that were at an all-time high.
Right.
So, we're in an environment now where, go back to the original premise, actually don't listen to the media reports. Look at the historical valuations of these companies, and you'll see that some of the stuff you're hearing isn't necessarily true on valuations.
Oh, they've gone up a little bit, but I was surprised that valuations for Nvidia and Google and Amazon are some of the lowest. Amazon was at 30 times earnings, which was the only time it's been 30 times earnings was 2008.
Yep.
I mean, usually it's infinity, right? Because they don't usually even produce earnings. And I'm like, wow, that's kind of unique.
Cool.
I mean, I know 30 might sound like a lot, but relative to the company's own history. I think Google's at 17 or something, which is again quite low versus their history. And
it
so,
gets
yeah.
even lower when you look at their enterprise value, because
Oh
these
yeah, you take out the
loaded with
cash.
cash.
Yes.
So you look at the markets and you kind of look at where, again, Amazon at a 10-year low, Google near a 10-year low, or Alphabet near a 10-year low.
Yeah.
Then you can go to other industries like Thermo Fisher, Zoetis, or Pool Corp. You look at these companies that historically have very good margins and very good returns. There's a lot of companies out there that aren't trading at what I would deem excessive valuations, or even demanding valuations.
Yeah.
So, and yeah, sometimes when you buy, I'll never forget, this is years ago, Meta traded all the way down to, I think it was 8 times, 9 times earnings.
It did that in 2022.
Yes. And the stock was down like 76%.
On the whole, how much you was spending on the metaverse.
Yes. And I was talking to some clients and I was like, look, okay. They're like, well, their business model is going to be disruptive. I'm like, okay, well, who's going to take their spot? Who's going to beat Facebook, Instagram, WhatsApp? Where's the competition really coming from? Well, TikTok. So, okay, that's one platform, but is it going to move the needle? No. So you had this hysteria and fear created via social media, investment houses. And you know how analysts are. When stuff starts going down, they just make up reasons why it's going down. And when stuff starts going up, they start making up reasons why it's going up.
Yes.
And I was just sitting back and I was saying, their business model has not changed at all. And you're talking about a company trading at a 50% discount to the S&P. Is this company 50% worse than the S&P? I'll never forget, this is back in 2018. I build my own indexes on companies, on quality, disruptive, whatever. And I went through the S&P and I'm like, wow, I'm like 30% of the S&P are really zombie companies, like bad companies. And I'm like, people are like, well, what do you mean? I'm like, well, they have leverage, they have no pricing power, and they're in competitive industries. And then I'm sitting there saying, did Meta really deserve to be at a 50% discount to that?
Oh, wow.
No. And so, that's the way I would think about things. If I was to give any advice, I want to give investment advice. Just think about things and look with your own eyes. Don't believe what you read.
Yeah. David, so good having you on, and I'm sure we'll talk again. And thanks for giving us another way of looking at what's happening and unfolding in front of us, and why this could be a longer term thing that could continue for quite a few years. And it's pretty big. Thanks, Dave.
I appreciate it.
Thank you.